All right, fantastic. Welcome back to the Crypto Valley Conference 2024, day 2. I'm glad you all made it, albeit the crazy rainy weather that we had this morning. Hopefully that's it, and that we'll enjoy the boat ride in a few hours. Thank you so much for being here so early. We have a great panel for you next, a lot of masterclasses and the like. So without further ado, I'll leave it over to Biba to talk to you about everything crypto funds.
Hello, everybody. Very much looking forward to this panel. So we are talking today about funds in general, but a little bit also about tokenized funds and other products. What I would like today to do is a little bit of introduction on the topics, because I'm not sure whether you are all fond of funds. And then we will first do an introduction and directly deep dive in the topic. I leave my wonderful panelists present themselves.
Thank you, Biba. Good morning, everyone. My name is Julie Bourgeois. I'm the head of legal and compliance of 6M, which is an alternative investment fund manager for crypto funds.
Good morning, everyone. Thank you, Biba, and thank you, CVA, for having us here today. My name is Santillan, and I run the coverage of financial institutions in EMEA for Fireblocks, and I'm also the country head for Switzerland. Pleasure to be here.
Good evening to all of you. I'm Laurent Marochini. I'm head of innovation for Societe Generale in Luxembourg. I'm based in Luxembourg, and I'm also blockchain and crypto leader for Societe Generale Group.
Okay, so let's deep dive. So we have 2 people from Luxembourg, 1 people from Switzerland, and half people from Luxembourg and Geneva. So let's first begin, Julie and Laurent, about the fund industry. The fund industry, where is it positioning exactly? Where Luxembourg is positioning versus Europe, maybe versus Switzerland? Give us a little bit of introduction and oversight.
Okay, so I will start, if I may, Laurent. Thank you. So fund industry in the broad sense, I would say that Luxembourg is very well positioned because it's the second place in the world, just behind the United States, for fund management and fund administration, and the first one in Europe. When you speak about crypto funds, more broadly, I would say that everything started in 2013 with big funds, big crypto funds in the US, for instance, Pantera Capital, was starting. In 2018, 2016, 2018, we can say that this is the rise of crypto funds in Europe. With for Luxembourg, first small crypto funds, let's say, we call it de minimis fund under the IFM directive, which started with investments in early stage token, in companies having some projects in blockchain or in different blockchain or in custody firms, for instance, things like that. So really at this point, it was the start of the crypto funds in Luxembourg.
So the small ripple in 2017, 2018.
Exactly, the rise, yeah. And I think that since then, 2020, 2021, with the bull market, there was really a lot of funds coming to Luxembourg with still the same things, small funds with asset under management of different level, and this the type of investment that we talk about. Maybe in terms of opportunities, if we want to speak about figures, we have to say that the old investment fund industry in Europe, all asset strategies mixed, it's 10,000 billion of euros of opportunities. If you look at the opportunities from a crypto asset perspective, even if it's small portion, it's still 50 billion based on our own research, but it's still 50 billion of opportunities. So making these investment opportunities in these investment strategies from a fund perspective, very, very interesting. Now, speaking of the landscape in Luxembourg and in Europe, the Six Monks, the company I'm working with, is the first authorized alternative investment fund manager in Europe, which is able to manage crypto fund for third-party fund promoter, which can go beyond in terms of asset under management, which can go beyond the threshold of the IFM directive, meaning that in terms of fundraising and in terms of asset under management, it gives the fund promoter a lot more opportunities. This is also as to put into interest, because the IFM as such, as an entity in Europe, give you a passport to distribute the shares of this fund in Europe. So meaning that based on specific notification that you have to do in some jurisdiction, thanks to the framework of the IFM, you can passport and distribute this fund very broadly in Europe, which is very interesting.
Yeah, so just to give a little bit of picture for people that are not familiar with Luxembourg, so typically you have an IFM, which is a manager of funds that go over the threshold of 100 million. Exactly. And then that's only for the management, but you need actually a depository bank, maybe a custodian, and then you have promoter of the funds. So the funds will be set up, it will be managed by a third party because it's the law, and then you have to have someone that does the depository and the custodian. And we have actually here, and also providers for key management and for custodian, typically like Anna. So we have here the perfect panel because we see the view of an IFM, we see the view of a service provider, and we see the view of the depot bank. So please also give us your perspective on the fund.
So my perspective, so I am in the space of the crypto since 10 years. So I will celebrate my 10 years time because I started to mine personally in April, May, 10 years ago. But so we had a lot of solicitation during the years 2017 to 2020, I have to admit. But what I have seen is a lot of crypto funds have been established in Cayman during this time because it was quite easy to set up a crypto fund in Cayman. Okay, now the ecosystem is ready. Not in all countries in Europe. In Luxembourg, as you said, we have all the pieces of the puzzle now. So we are able to establish a crypto fund. We have a lot of demand in Luxembourg. I have about 80 to 100 demand of crypto funds per year, and it's coming from Switzerland. In Switzerland, they want to launch crypto funds, but they want to use Luxembourg to better distribute. In France, in Luxembourg, and in UK, but always through Luxembourg. In Ireland, I have some solicitation, but I have to say less than in Luxembourg. But after, I think we will discuss about the type of demand we have. But I have to say that before it was in Cayman because the ecosystem was not ready. And as you have said, now the ecosystem is ready. We have Depot Bank. We have U6M in Luxembourg as IFMD.
Finally.
Yeah. We have the lawyer ready. We have the crypto custodian, the tech provider. So everything is ready. And what is interesting in Luxembourg, we have a dozen of virtual asset service providers. And me as a bank, if you want to work, launch a crypto funds, and if you want to work with a bank, we will just tell to you, okay, we want to work with you. By the way, we need to work with regulated actors with the VASP. So if you have the VASP, it will be more than easy to move forward.
Ouais. Because you have the depot bank, the IFM, but the depot bank, like Societe Generale, they need to have a custodian that does the custody of crypto assets. Otherwise, you are missing one piece.
Yeah, maybe to add, because the IFMD is a very specific framework.
Which is a directive.
Which is a directive, a European directive, which comes to regulate the management of the fund in Europe, which is made by the IFMD on a day-to-day basis. But if you have a fund, an alternative investment fund, managed by an IFM, a depository bank is mandatory. You cannot do without it. And we will speak about the operational model afterwards. But yeah.
So we set up a little bit the scene of the crypto funds. But what I wanted also to ask the panel is to give a little bit of the big picture and say, okay, the crypto funds are actually one product. But actually you have probably the crypto funds, you have the tokenized funds, like traditional funds that would be tokenized, and you have the ETF and ETP. So here, the same, we can begin with you, but to give a little bit of position between crypto funds versus tokenized traditional funds or tokenized funds, and then ETP, ETF.
Okay.
It's fine.
Can start with crypto funds because it's what we do. When we speak about crypto funds, you can speak about different things, different type of product, different investment strategy. Crypto funds, first, when you think about crypto funds, the first thing you think about is, okay, I have an investment fund, I raise funds from a numerous number of investors, which the purpose is to invest in assets. Which are a crypto asset. So you can have either the fund investing in a token, blue chip token like Bitcoin, Ethereum, these kind of things. And you can also have funds that are more set up with a venture capital, let's say, strategy. Because as you see as you know, in the Web3 investments, you have companies which have a project of product or services which are quite new in the field and which are looking for funds to start the project and to run it, etc., etc. And so we call it the Web3 VC capital investment. So these companies issue sometimes shares or sometimes tokens, we call it early stage tokens, which are here to support the project, and the funds invest in this kind of asset, either shares or early stage token. You can also have funds which are investing in tokenized assets, real world assets, which are tokenized. But we still call it crypto funds, even if they are investing in crypto tokenized assets.
And what is interesting as well is that this early token, they may have a very low value. So you are under the threshold of 100 million assets under management, and suddenly, because of their value, because they get listed, puff, they go on the threshold, and then they need you actually, because they go out too much. The fund is way, the valuation of the tokens are suddenly booming, right?
Yeah, it's true for the early stage token. With more time, I think, to gain in value, but it's also true for for the liquid tokens, the very liquid tokens.
With the volatility.
Yeah, exactly. We spoke about de minimis funds earlier today, which are the first layer of the IFM directive we spoke about, and which we call it, this type of funds, we call it de minimis funds, because they are under the threshold of 100 million or 500 million of assets under management. And then you're right, with the volatility of the market, with the bull run, etc., you can finally, all of a sudden, if you decide to stick under the 100 million threshold, you can go above. And in that case, this is where you will need an authorized IFM instead of a registered one.
Okay.
Exactly. And then the IFM directive will be fully applied to you, but this is
So we hope that all the funds go like this, so they do need.
Exactly.
Anna, on your side.
On my side, I think we've seen and we've talked a little bit about crypto funds. One of the areas that is raising a lot of interest and a lot of headlines this year is actually the second part. So traditional funds that have decided to launch new share classes or even new vehicles on a tokenized format. And it's taking a lot of attention because it's breaching a new demographic of investors for the traditional asset managers. Obviously, we were discussing just before the panel how nowadays the largest crypto fund is managed by a traditional player, which is BlackRock with their Bitcoin ETF. The other trend aside of the ETF that is gathering a lot of attention at the moment, both in the US but mostly in Europe, is what other asset classes can we tokenize? And money market funds are coming up as a very interesting instrument. There are billions of assets in stable coins at the moment. Many market makers, many crypto funds, many crypto investors use stable coins as a way to take risk off the table and keep money in cash. However, with the current environment of high interest rates, you're leaving a lot of money on the table. And so there is a very strong demand for instruments that are yield-bearing, that have a fast settlement cycle, that can be taken under custody by exchanges or by custodian banks that might or not might be using Fireblocks as an underlying technology. And the more interesting part is that it can be transferred quickly and used as collateral within the crypto ecosystem. So I think in addition to funds with cryptocurrencies as underlying, the tokenization of traditional funds themselves is starting to find a very interesting foot within the crypto digital asset ecosystem. This is where we are seeing a lot of the traction, a lot of the projects happening this year.
And Laurent, tokenized funds, ETF, ETP, what do you think?
Yeah, so for crypto funds, as I said, there is the interest of the market, and you have two types of crypto funds. The one who are doing investment in the top 10, top 20 cryptocurrency. So I see a rising interest in Europe. I see also rising interest in VC that are doing investment in Web3, especially in France. A lot of VC in France, they want to launch alternative investment funds with an exposition in cryptocurrency, but they also want to have utility token also, so they need to work with a depot bank. So this is for crypto funds. ETP, ETF, they are not coming to me to tell, Laurent, I want to launch an ETF, can you help me? By the way, it's happening now in US for the ETF. It was already happening in Europe because we do not have ETF crypto, but ETF crypto physical one. But we have already ETP since 4 or 5 years with coin shares, 21 shares. So it is already the case. By the way, for ETF, ETP, for my side as a bankers, it's more interesting from the investor side because now the investor, they can have an exposition to cryptocurrency directly. So my mother, for example, she just have a problem with a phone. She has a problem with a digital bank. If she wants to buy, she will never buy Bitcoin, but maybe with the bank, she can buy ETF crypto in the future. So she can have the exposition directly through the bank. So I see the interest for the investor side, for the ETF and ETP. And the last part, it was the tokenized fund. Yes. So in Luxembourg, Julie just told that we are the second place in the world. We have 5.5 trillion of US dollar in asset under administration in Luxembourg. In US, I think they are at 20 or 25. So it's a huge market. We have seen the example of BlackRock, but we have an example of Templeton. A lot of asset managers, they are coming in this field. Also, yeah, with the stable coin, but also to put tokenized fund as a collateral. So it will be the next big thing also in the future. But my trend is everything is happening everywhere. Mm-hmm. Especially in Luxembourg. Now I'm joking, but in Switzerland, in France, in Luxembourg. But I have to say, crypto fund is happening now, tokenized fund is happening now, and the last one, ETP, ETF, is happening now. And regulation is happening now. So we have all the green light to move forward together.
And maybe just a point on the ETF and ETP. It's true that with the rise of the ETF from BlackRock and others, it's attract the appetite of institutional investor. So clearly, the investor, it's very interesting what Laurent said, because investor side, people are looking at the crypto funds from an institutional perspective now, because if they can invest in ETF, it means that they could also invest in regulated products, investing in crypto assets. So it's give the world and maybe the world of alternative investment funds more information, more sense of what as investing in crypto asset will mean. And regarding ETP, this is also very interesting because we have a client who decided to set up a fund investing directly in an ETP, because institutional investor or professional investor didn't want to invest directly in the ETP, but they was looking for investing in a regulated product, because it gives them more comfort from the product perspective, an investment perspective, and from an investor perspective as well.
And for a depot bank, less.
Évidemment.
But we still need you, in any case.
Yeah, okay, interesting, but so who will win the battle? ETP, ETF, crypto funds? Difficult to say. Huh?
They will all win the battle. I don't believe there is a competition, because it's completely something different. Because for me, a crypto fund, they can invest in top 10 cryptos. For example, I have onboarded a crypto fund. He wants to do investment in Bitcoin, Ether, but also there will be a cash part, a money market part. So it's like a traditional fund, but with a crypto component. So it's completely different than the ETP or ETF. ETF mono Bitcoin, for example, it's like the Bitcoin, but you don't have. My mother, in this case, she has no problem with the wallet. But anyway, it's the same as Bitcoin. And after a tokenized fund, for me, it's like a traditional fund, but on a token format. It will be more easy to do the circulation. From an efficiency perspective, it will be more easy for all of us. It will be a new distribution channel. So I don't believe it's a competition. I will not speak about competition. By the way, for me, it's 3 different products, but they will definitely find new investors and a great efficiency in the system as well.
I agree. I don't think at this stage where the penetration of crypto within the overall investment universe is so small, competition is the right word. I think we will have greater adoption in all of the 3 segments. Certainly, as Laurent was mentioning, probably the tokenized funds are in a different category, because it is the same investment vehicles, simply with different rails for settlement. The end investor will, at the end of the day, not really notice. It's what happens in the back. I think when it comes to actively managed funds and ETFs, as we see the universe mature, there will be room for investors that have more a preference for beta, pure, cheap investment-linked products, and there will be also room for active investment. And certainly within the ecosystem of a lot of innovation and a lot of volatility, there is a lot of room for actively managed funds and alpha to be generated. So I think as we see portfolios mature on the traditional side, and also crypto investors becoming more sophisticated and not only investing directly in the cryptocurrencies, but also starting to trust professional asset managers to deliver alpha for them, we will start to see all of these different products raising in adoption.
So like a diversification of risk and diversification of portfolio. Yeah.
For me, so you do not have a competition per product. By the way, if you are not moving forward, the other will do. There will be a competition between countries. There will be winners and there will be losers per countries. even if in Europe we have MiCA and we have an harmonization, it's up to the local regulator to move forward, and it's up to the local ecosystem to move forward. And I believe that the winners of tomorrow will be linked to the efficiency of the ecosystem. That's why we are speaking about Luxembourg, why it is important for us, because we are the second worldwide place in the fund industry. Tomorrow we can be at risk if we are not moving forward in the crypto tokenization format. So for me, there will be competition, there will be loser and winner in the future, but in terms of country and geographical zone.
That's very interesting what you said, because in Switzerland typically you had a lot of AMC that were developed, and then ETP when you wanted to trade, so it has been come very early. And then you had Frankfurt, for instance, that came as well. Then you have the ETF of the US coming now. So yeah, everybody is looking at it and searching.
Yeah, that's true. And in Europe, if you come back to Europe, maybe the approach with the regulators, it's very specific when it comes to crypto, if I may add, because you have to, and speaking about our experience at the level of 6M, because we had to go through the instruction 5 with the regulator to obtain our license, our IFM license, and you have to take them by the end, I would say, and explain all the aspects of a crypto fund. In terms of risk management, in terms of portfolio management, the way the decision will be made, because we have to reassure the regulators, we have to reassure the public with respect to the volatility of crypto assets.
But that's interesting. We actually had these discussions, and we prepared questions, but actually we are speaking, so we don't follow at least the question. But that's interesting. Can you elaborate a little bit more on the setup, actually?
Mm-hmm. Setup of a regulated fund under the IFMD or crypto fund in general. So from the beginning, the initiator or the fund sponsor come with the idea of a strategy, sometimes investment strategy, and the project to invest in a specific crypto asset, or maybe a diversified portfolio, as we said. So sometimes they come to us, sometimes they come to the depository, sometimes they come to the lawyer, but they come with an idea of setting up a fund. Here, our job at 6M, or job of Biba or Laurent, for instance, or even Anna, from a custody perspective, is to explain what is the operational model and how will the fund will operate on a day-to-day basis. So to operate a crypto fund, you will need, as we say, a regulated crypto fund, the IFM, which is managing the fund on a day-to-day basis from a risk management perspective, from a portfolio management perspective, from a fund governance perspective, and from a fund accounting perspective as well, because it's very specific when we speak about crypto assets. You will need a depository bank, as Laurent said, which will act as safekeeper of the assets in general, but you also need in the operation a custodian, because sometimes the depository bank cannot do the safeguard of the virtual asset, of the crypto asset. So we need also a custodian that will take care of the assets, that will take care of the private keys, and will reinforce the security around it.
Interesting. Can you develop on the keys typically, because you are providing solutions typically? So how does it would work in that?
Very happy to explain. And actually, this is one of the things we were talking about, the history and how things evolved from 2017 until today. The main difference is that in the earlier stages of the cycle, because there were not many custodian banks that were able to offer the service outside of Switzerland, there was not a regulatory regime in Europe. A lot of the funds and a lot of the entities were going for self-custody, where the portfolio manager, effectively, will be in some cases holding the private keys, protecting the assets. Now, when we go into regulated funds, obviously you do need a qualified bank holding the custody of the digital assets. And what we're seeing now across Europe is that in the light of MiCA, we are starting to see the first banks outside of Switzerland really offering regulated custodian services. So the first bank in Italy is about to launch services. The first bank in Spain is about to launch services. We have some in Germany already. Luxembourg and France are also progressing very fast. And so now you do have, as a portfolio manager, as a project sponsor, the ability to really choose and have the full value of services. So at Fireblocks, what we do is we provide very secure key management and wallet infrastructure, which regulated banks will be leveraging to provide custody of cryptocurrencies. In some cases, we will have some depository banks that have the ability to take both roles, but in many cases, these roles are segregated.
Yeah, and they are with CASP, a crypto asset service provider.
Exactly.
We call it like this in EU or VASP in Switzerland, affiliated SROs. Would you accept someone that would say, I want to have a hosted wallet, an unhosted wallet, unhosted, self-hosted?
I'm working for a regulated company, so we need to work with regulated actors. By the way, after it will depend on the setup, because we have, as I said, we have already onboarded a French client, and that is working with Fireblocks. And so we have added a regulated layer on top of Fireblocks, which allow us to be SAN compliance from a French perspective. So I just have to say we will work always with regulated actors, and if not, we will need to add a regulated layer.
So we do need this custodian, huh?
We do need, and as we said, sorry, I think there is a question.
Sorry, can we take just afterwards? But I would love to take some question. Oh, if it's fine, yeah.
Yeah, as we said earlier, we need a depository bank for a regulated fund. And sometimes a depository bank can also do the custody of the crypto assets, sometimes not. But in any case, you will do it. In Luxembourg, when you set up a fund, it's mandatory. So meaning that self-hosting what? Sorry?
Mandatory by law and regulation?
Mandatory by the regulation, yeah. Because as we say, the IF, the fund, needs to have a depository bank. Which is mandatory. So the same goes for the custody of crypto asset. This is the requirements by the regulator in Luxembourg. But I think that it has to be seen in a good way. Self-hosting wallet would not be possible for a regulated fund, which can be seen badly for some of the actors, which I understand completely, but it has to be seen as a guarantee of security around the asset that the fund will have. And in terms of appetite of investor that will invest in the fund, in terms of, I think, serenity of the market, etc., etc., I think it has to be seen as in a positive way instead of a negative way.
Yeah. Hello. So retail, huh, you mean? Or in general? Okay. Okay.
Yeah, but maybe if here we are more speaking about regulated or at least semi-regulated funds, which are not, which will come in the fund. At least professional investor, meaning that this professional investor will invest in the view they will expect some specific layer of regulation. I would say, so meaning that in this framework, this is the framework they expect. It's not the same that for private investor or retail investor, because they expect this level of regulation, this layer of regulation. So this is something which is in the requirements, and this is why they are looking for, either from a fund sponsor perspective, this is the reason why they want to set up a regulated fund, and from an investor perspective, this is what they are looking for: the protection, the regulation, the guarantee of the good safekeeping of the assets.
I think from our perspective, what we're seeing working with many fintech platforms that want to offer that 24/7 service is something that many people have picked up on. You are often very busy during the week, you're reading the newspaper on Sunday, and you come upon an idea and you just want to trade. And so this is where tokenized funds are coming into place. In Europe, there is the DLT pilot regime that has tried to put some safeguards around this. The reality is the limits and the conditions are so strict that very few projects are seeing the light with any success. There's a lot of conversations ongoing with regulators to try to make this more efficient, to allow for e-money tokens to be allowed to be leveraged so that you can also trade without having to wait for the bank to open on Monday at 9 a.m. So I think it's coming. There are two bits that need to, or several pieces that need to happen. Fiat has to be available, and that is certainly coming. We're starting to see projects coming up in July this year already. You need to have the exchanges with the appropriate licenses to be able to hold not only cryptocurrencies but also security tokens, and many of them are in process of obtaining the appropriate licenses. And then finally, you need that supply demand to match. At the moment, there is a demand for money market funds. That is the easiest way to access. There is appetite from the asset managers and the investors to continue the conversation. Probably listed equities will come next, and probably alternative funds will take a bit longer, but the path and the trajectory and the interest is already there.
No worries, adoption is coming, and there will be, I believe, an acceleration this year or next year, because there will be the experimentation at the central bank, European Central Bank level. So there will be a lot of live experimentation in the coming months. So it will. That will mean that we will have more adoption, more players in this field, and in terms of customer journey, I suppose that it will happen. For pilot regime, I don't know if it is a real success.
No, not really.
You have a lot of restriction. It's live since 23 until 26 for additional 3 years, so until 29. So there will be the CBDC, so DG Euro, DG Swiss franc, because we need to have cash on chain. There will be adoption, because if you have experimentation, we will have adoption and stablecoin and so on. So we have all the green lines to move forward. You will just need to find the right product after.
So we have like 48, 47 seconds. But do you have any questions? We've seen, yeah?
But they are very liquid and difficult to access for the majority of investors. If you do have access to...
you know that very much.
No, you can tokenize what you want. It depends where the market is and the interest of the investor. So today we see also rising interest in tokenization, and we have made all the top 10 banks in the world. They have tokenized financial products. So and you have the famous BCG report that shows that we can tokenize up to 10% of the GDP by 2030. So it's coming now, and we see that the giant are coming in this field, like JP Morgan, like HSBC, like Societe Generale, of course. But anyway, it's coming now.
Any other question? Otherwise, yeah? So yeah, I think, even if it's decentralized and distributed, you do have domestic interest. So you will still have interest from countries to regulate it, to adapt to their own local interest. It's not necessarily in the best interest of the investors, nor for the best interest of the technology that we love, otherwise we would not be here. So, but we have to see, I don't think it's necessarily, unfortunately, always bottom to top, but sometimes top to the bottom. And this is why there was a huge interest by having this ETF in US, because we say, okay, so maybe regulation is not that hard for the US and we can move forward. And the same for Europe. They will still be fragmented, and there will still be countries that want to develop a specific type of products because they know it. You heard today that typically Luxembourg, but Ireland as well, hi Colin, would typically be knowledgeable. They have the reflex, the mindset, typically to move in this type of assets, or this way of moving to this type of assets, and then it would grow, and then the regulation would adapt as well. So I'm very fond of having business and products driving the regulation and not the opposite. Unfortunately, that's very, very strong in Switzerland, less in Europe, unfortunately.
You mean business that drive the practice and
Ouais.
It's different from it has to be seen on a case-by-case basis, I think. This is we didn't live the things like this. We once again we try to adapt the current, at least because there is MiCA and there is the specific regulation for virtual asset service provider, and you're right, the step is very high, and for some of them is quite difficult to pass this step. But when you speak about fund management, I think that was very important, was to adapt the crypto aspect to the current regulation and to the expectation of the market and to the regulator.
6M is typically a good example, because
exactly.
You are the first alternative investment fund manager that is authorized to handle crypto.
Exactly.
And that's typically the FMD, so the usual directive, but it's the regulator who is just pushed through an initiative. So once someone decided to set up an AFM and go to the regulator and push the limit of the regulator to have one IFM that is not handling private equity, private debt, but crypto assets. So you see, sometimes it's just pushing a little bit the interpretation of the regulation.
Exactly.
Okay, thank you very much for your time.